All right, good morning. This is our new CIA Part 1 session. We have 8 students in this group. We have Ms. Samia from Lahore, Waqar Akmal from Lahore, Hamaz Zafar from Lahore, Zishan Malik and Zishan Maqsood from Bahawalpur, and Nasir Khan from KPK, Salman from Kuwait, and we have Malik Waqar Hussain from UAE. These lectures are specifically recorded for all of you guys so that we can proceed in our goal of achieving the CIA qualification. So we are starting part 1 today. Let me just give you a brief overview and then start doing the main work. Paper 1 is titled as Internal Audit Basics. It has 3 sections. Section 1 is mandatory guidance. There is 35 to 45% weightage assigned to this section, and we have two units in GLIME that cover section 1. So there are 2 units, unit 1 and 2. Section 2 relates to internal control and risk. The weightage assigned to this section is 25 to 35%, and there are 2 chapters related to, or 2 units related to the section, unit 3 and unit 4. Then we have the longest one, the section 3, and the technical one as well. Section 3, conducting internal audit engagements, audit tools and techniques. So the weightage assigned to this section is 25 to 35%, and the units are 5, 6, 7. Remember, these are the minimum to maximum weightage assigned, and the number of questions could be somewhere between 35 to 45% from section A, minimum 25 to 35% from section 2, and then between 25 to 35% from section 3. So weight is not exactly the lower or the upper, it would be somewhere between. And there are total 7 subunits. Mandatory guidance that we're going to start today. We have independence, objectivity and due care. This is your unit 2. There are total 7 total units in GLIME part 1. The third is control frameworks and fraud, control types and techniques, data gathering and data analysis, and we have conducting engagement sampling, and the last unit is procedure, analysis, conclusions and documentation. So we will do each and every question from the GLIME software. We'll do each and every text item from the GLIME book so that you have a clearer and deeper understanding of all the things, because paper 1 is very compared to the other parts is shorter, and many students think it is very difficult because the problem is that they do not have the practical exposure of working in any organization. So my job as a trainer would be to assist you guys to understand all these concepts from a practical viewpoint, so you get a better understanding and so that you can answer the exam questions in a professional manner. So let's get started. So we are going to do unit 1 first and the subunit 1.1. So the unit 1 contains 8 topics: applicable standards, code of ethical conduct for professionals, internal audit ethics. We will do each and everything in introduction and principle, ethics integrity, ethics objectivity, ethics confidentiality, competence, and the last is the internal audit charter. So these are the 8 sub units within the main unit 1. So today we are going to start the applicable standards. What are the standards applicable to the work of internal auditor? It is important for us to know what are the standards that affect our work. So let us just start and see the standards affecting the work of internal audit. But before we do that, we need to know what is internal audit, what is the function of internal audit, what are the various standards that impact us that are issued by the Institute of Internal Auditors. So let's go in detail. First of all, I'll give you the overall view of section 1. What is included in section 1? It includes the definition of internal auditing, section 1, part A. It includes code of ethics, the 4 components of code of ethics we will do, and then it has international standards on internal auditing. So these are all coming just in a few moments, and I'll explain each and everything in detail. First of all, you need to understand the definition of internal auditing very well. It's very crucial you understand what is the meaning of internal auditing, because this is the base or the foundation on which your whole understanding of internal auditing will be based. So you need to have a very clear understanding what is internal auditing. So I have broken down this definition, but just let's read this definition first. What is internal auditing? Internal auditing is an independent, khud mukhtar, objective, bamaksad. So we are independent and objective. These are the two features of our work. And we do two types of work. We provide assurance and we provide consultancy and advisory. So we have understood four things. First of all, internal auditing is an independent and objective activity that does two types of works for an organization: assurance and consulting. So internal auditing is an independent and objective assurance and consulting activity designed to do what? To add value and improve organization operations. So what the first line means that internal auditing is an independent, खुद मुख्तार और बामकसद एक्टिविटी है within the department, within the company, जो दो मेन काम करती है: assurance provide करती है, auditing and consulting. For what? To add value and improve the organization operations. All right. How does it do it? Yes, further explained. It helps an organization accomplish its objectives. What are the organizational objectives? Profit maximization, growth, providing a public service, value addition, increasing market share. There could be many objectives. So the internal auditing department helps the organization accomplish its objectives. How? By bringing systematic and disciplined approach to evaluate and improve the effectiveness. Three things that we help the organization with: risk management, control and governance processes. So the overall view, what we got: internal auditing is an independent and objective assurance and consulting activity that adds value to and improve the organization operations. Fine. It helps the organization to achieve its objective: profit, growth, survival, whatever the objectives of the organization are. How? By systematic and disciplined approach to evaluate and improve the effectiveness of three things: how the risk management processes are doing, how the control is operating, and how the governance processes are working. So this is the basic definition of internal auditing. I will further explain about a couple of slides later. This definition has been broken down into components that will make it even more clearer to you. So it's very important you understand the basics of internal audit very well. This definition describes the overall work of internal auditor and the internal audit department. So it's crucial that you understand. So, all right. So IIA, Institute of Internal Auditors, have identified four purposes of internal auditing. These four purposes are: number one, purposes of the standards that have been set for the internal auditors and the internal audit departments. First is the basic principles that we should use to practice the work of internal auditing, delineating the basic principles on which our work is based. Second, it provides us the overall framework for performing and promoting the broad range of value-added internal. See, internal auditing is not just a simple financial. We have multiple type audit we perform for an organization. We have operational auditing, compliance auditing, financial auditing, due diligence. So many types of work we do for the organization. So these standards that have been issued by the Institute of Internal Auditors as a guidance for us, they provide the basic principles for the practice of internal auditing. They provide a framework, the overall structure for performing and promoting the broad range of services we perform for the organization: financial audit, consulting, advisory, operational auditing, due diligence, compliance, etc. We'll read about all in the future. And then the standards do the third thing for us is they establish the basis for evaluation of the internal audit department, how well we have operated. And then third, it establishes and fosters organizational processes and operations. It helps the organization improve its operations and processes. So these are the four purposes that have been the basic reason why the standards have been issued for the auditors and for the internal audit departments in various companies. So these standards formerly were known as the International Standard for Professional Practices. Now they are simply called as standards. So briefly, there are four purposes: provide basic principles for internal auditors, provide a framework so as we can provide various types of value-added internal auditing services. And these standards evaluate the performance of internal auditors and internal audit department. And the fourth, that these standards Encourage improvement of organization processes and operations. Remember, internal auditors in no way is responsible for designing implementation of internal control procedures and policies. We will simply assist and advise the management in development and establishment of the internal controls. We are not involved in designing. We are not involved in drafting the control procedures. That's the thing that I'll keep on saying, because we should not have any operational role. Our work is only as a watchdog. We are not involved and we should not be involved in operations of the organization. If we do, we are not auditors. That will totally violate our performance as an internal auditor. So the definition has been, further, these standards, we'll see what types of standards we have. So they are vital for the practice of internal auditing. So you don't need to memorize them. These standards are not required to be memorized. They are just principles that you need to follow so that you know the work, understand the work, and you will appropriately apply these standards. So these are in fact not for memorization. That is why I will never recommend, throughout these are lectures, I will never recommend to memorize any standard number. But you must be familiar what are the standards. So there are basically three types of standards. First are the attribute standards. Attribute standards, which are numbered in 1000, they govern the responsibilities and attitudes and actions of the organization internal audit activity. Means your responsibility, attitude, how you should act. They relate to the internal audit department, attitude, internal auditors. Next is the performance standards. They are related to the performance of the internal audit department. The first is attribute of the department, attitudes, responsibilities and actions. The second is the performance standard that evaluates the performance of internal auditors. The second standards is the performance standards. They are numbered in 2000. You do not have to learn or memorize any number. You will see I'll solve hundreds of questions and there will be no need to memorize any standard number. You just need to understand the essence of these standards. No memorization is required. So these performance standards, they govern the nature of internal auditing and provide quality criteria for the evaluation of the internal audit department, how well they have performed. And then there is a third layer of standards which are called implementation standards. Technically, these are not specifically standards. They simply explain and elaborate what is in attribute standards and implementation standards. So implementation standards expand upon the individual attribute or performance standards. What has been given in the attribute and performance standard, implementation standards simply elaborate on them. All right. So there is a graphical depiction of how the overall hierarchy of IA standards is laid out. The foundation to the internal auditing, the foundation, remember, is the internal auditing definition. What the definition that we have learned, that's the basic. This is the basic of internal. You have to understand the definition very well. I recommend you should memorize the definition with full understanding what does it mean, because the definition is so comprehensive that it covers so many things. Normally, whenever the internal auditing is defined, this definition which you have just read is used by almost every professional accountancy body in the world. This definition is so comprehensive, so deep, well encompassing. So the definition of internal auditing is the foundation. The next layer is the code of ethics, which we are going to study today. Then the next layer is two standards, attribute standards and performance standard, and the detail and description of how these standards are to be implemented. We have a third layer called the implementation standard. So basically there are two standards, attribute and performance. Implementation standards simply elaborate upon the attribute and performance standards. So these are mandatory guidance that you must be familiar with. And again, I'm telling you, you don't need to memorize the attribute or performance standard numbers. And finally, we have some specific guidelines from the Institute of Internal Audit, position papers, practice advices and practice guides. These are used by the professional auditors who are working as the auditor, head of internal audit department in companies. So practically they won't be tested in your exam. So they are recommended guidance, but normally they are used by the professional auditors. So you won't be tested on these areas. Specific area that is mandatory for you to learn is these three layers, and which we'll be discussing in the coming lectures. All right. So again, coming back to the definition of the internal auditing, we need to know what is the purpose of internal audit department? What is the authority and responsibility? We need to know why internal audit department exists. So the purpose of internal audit, again, I've told you, we are independent and objective, Azad and Khud Mukhtar. And we do two types of things. We provide assurance and consulting. Assurance is related to audit work and consultancy advisory. Remember, assurance is audit related work, attestation related work, and consultation is advisory. So we work as an auditor and as a consultant at the same time. But remember, we do not involve ourselves in development of the internal controls, risk management procedures. We are only there to advise and provide consultancy. We are not to be involved in the designing process as to take the responsibility of the designing and drafting and implementation. Our role is only facilitation and consultation. That's a very crucial thing that you need to remember. That's where he keeps on testing you, so that you people should know what is the exact position of internal auditors with regard to the governances, risk management and control. All right. Next, this is in fact the broken down definition. All is emerging from the definition. Internal auditing definition is the core. So what we do, we add value and improve operations of the organization. How? By evaluating and improving the governance processes, by evaluating and improving the effectiveness of risk management, and by evaluating and improving the effectiveness of internal control. These three domains. So we, again, internal auditing definition, we are an independent and objective entity within an organization, provide two types of service, consulting and assurance, auditing and advisory, so that to add values in the operations of the company. There are three domains where we serve. We help organization evaluate and improve effectiveness of governance, evaluate and improve effectiveness of risk management and control processes. We will go into detail further as we keep on moving forward. The next, we need to know the authority. What is the authority that internal auditors have? That is very important for us to know. So remember, when you're working in a company as an internal auditor or head of internal audit, your authority must be defined. You should have support from the senior management. Support from the senior management is crucial. The most crucial element of internal auditor's position and the authority within the organization is how much support do we have from the management and the board. Remember, when I say management, it means chief executive officer and the operational heads. And when I say board of directors, that means the audit committee. We will know this segregation as we keep on moving forward. So that's very crucial. Since we have to access various records, people and physical properties, so internal auditors must be given power to access records, personnel and physical properties whenever it is needed. See, we in order to discharge our performances, our work, we must be given authority to access records, personnel and physical properties. So how do we get these powers? These powers are necessary for the performance of our service. I mean, if we do not have these powers, then how the internal auditor is able to give an independent objective advice and audit? So that is why it is important we should be given power to access records, personnel and people whenever is needed. So there is a formal document that gives us the power in the organization. That document is called the Internal Audit Charter. The Internal Audit Charter is basically the power source of Internal Audit Department. The Internal Audit Charter contains the purpose of internal audit, the authority and responsibility. So all this purpose, authority and responsibility, we will discuss it in detail in the coming chapters, what is Internal Audit Charter. So this Internal Audit Charter is drafted for the internal audit activity. IIA is a short form of internal audit activity and IIA is short for the Institute of Internal Audit. So never mix these. IIA stands for Institute of Internal Auditors and IAA is internal audit activity, which means internal audit department, internal audit function. So this internal audit charter basically is a very powerful document that defines the authority, the purpose and the responsibility of the internal audit department. So this is the document that gives us the power. So it's this, whenever there's a conflict with regard to the internal auditor's work, so this Internal Audit Charter is a very good guide to define what is our role and responsibility. So this charter is, remember, this charter is drawn by the head of internal audit, and this charter unless it is approved by the board, it is worthless. So it is no doubt it's drawn by the head of internal audit in consultation with the board and management. Once this is drawn up, it has to be approved by the board. If the board approves this charter, it becomes a very powerful document that governs the overall work of internal audit. So we have read the purpose. Why do we exist? We exist to provide consultation and audit. That's our job. And again, we are independent and objective, and we provide service in 3 domains: the risk management, control, and governance. Don't forget, this is all from internal audit definition. We are independent and objective. Fine. What we do? 2 types of work: consultation and audit. Fine. In which domains? 3 domains: risk management, control, and governance processes. Remember. So where do we get authority? Authority is gained through internal audit charter, a very powerful document that is approved by the board and the management, and this regulates the work of internal audit. All right. The next is responsibility. Okay. I've told you we do 2 types of work: consulting and assurance. Assurance is audit, consulting is advisory. Don't forget that. So all these services, of course, they help the organization to improve its operations. So we can say that these services add value. What is actually value addition? Simple. What is value addition? I'll tell you. This is a log of wood, and you can buy just it for maybe $500. If this log of wood is cut into planks of various sizes and lengths and converted into a nice polished furniture, wooden furniture, this might cost $5,000. So what happened that the value of this log has gone up by 10 times? Because something has been done that has increased the worth of this log of wood. This is called value addition. Value addition is something that creates worth in operations, in activities, in products or services. That's what we do. We are not useless. We are very powerful entities. Do not underestimate CIA. Certified internal auditors working in big organizations play a very crucial role in efficiency and effectiveness of operations. Why? Because external auditors just come for the audit for a couple of weeks. So how do you expect that guy to do everything in 2 weeks? We are there forever. Internal auditors are there in the company forever, as long as our job is there. So we are resident auditors. So the kind of work we can do, external auditors cannot. So that is why we are more important for the organization operations and effectiveness and efficiency of its activities. So don't underestimate what we can do. CIAs are very powerful in organization. I mean, the internal audit department can be a great help for the organization to improve its value addition so as to make its operations and products and services more useful and valuable for the consumer. So, all right. And as I told you, the type of work we do is consulting and assurance, and in 3 disciplines. We help organization evaluate its effectiveness of governance. We help the organization to evaluate the effectiveness of its risk management and control processes. So again, still we are circling around the definition of internal auditing, that we are independent and objective, we are consulting and in an insurance business, and we provide 3 types of services in 3 domains: governance, risk management, and control improvements. Right, so that sums up. Now, the next area is the compliance with federal laws. Federal laws. Remember, CIAs are not expected to be proficient in law. We will read about that, proficiency and everything. But we must be familiar with the laws that impact us. We don't need to be lawyers, we don't need to know laws in detail, but at least we need to know what are the laws that affect the internal auditor. Since many companies that are not US based, when they go to the US for listing in New York Stock Exchange and NASDAQ, so the internal auditors worldwide must be familiar that those companies that are going to get listing in the US, they must be familiar with certain laws. So internal auditors worldwide must be aware that US laws and their consequence of non-compliance. So there are 3 laws that affect our work. First is the Racketeering, Influence and Corrupt Organizations Act. Second is the Foreign Corrupt Practices Act, and the third is Sarbanes-Oxley Act. These are huge laws. Look at the book, huge. We are not expected to learn the details and minute finer details of these laws. We'll be just given an outline what these laws are and what is its impact. So let us read briefly the first, the Racketeering, Influence and Corrupt Organizations Act. This law was promulgated in 1970. Why 1970? Every law has some dynamics, some impetus that resulted in the formation of law. During 1970s and 60s, the mafia in the US was very active. I'm sure you remember the Sicilian mafia, the Corleone family, the Godfather. That was the time that the US economy was booming and people, the underworld was looking for an opportunity to make money. So this law was specifically promulgated and implemented to restrict the criminal activity, this crime syndicate. Crime syndicate means unorganized crime. Look at this guy, Marlon Brando, the Godfather. A crime that is organized and run like a business is called a crime syndicate. So in order to control this, the law Racketeering, Influence and Corrupt Organization Act of 1970s was passed. It was to prevent extortion which you call bhatta. I'm sure you people know, India, Pakistan, extortion money, the powerful get money from the weaker, which is also called protection money. Money laundering, it's changing the source of your earned money and turning your black money into white money. The money that is illegally and unethically acquired and converting it to a kind of money that appears to be fairly earned. Loan sharking is like excessively charging interest from the borrowers outside the banking channel, like Pathan gives loans to loan seekers at an excessively high interest rate. That's what you people know that. Obstruction of justice means restricting the course of law and bribery. So these all are considered as racketeering. So this RICO was, in fact, I told you, was passed in 1970. The focus was to restrict and to somehow prevent the transfer of illegal monies. You know what was happening in 1970s? The illegal money was finding its way into corporate world through listings, through acquisitions and mergers. So the idea and the main emphasis of this law was to restrict the transfer of illegal money to the corporate world. So RICO has both civil and criminal provisions, meaning there are civil implications of the law as well as criminal. Civil means that something that results in some damages and financial compensation. Criminal means it could result in prison sentences. So following activities are illegal under RICO, specifically the activities using racketeering income to buy new business, meaning using the ill-gotten money to buy a new business. See, I told you the law was specifically designed to prevent ill-gotten money into getting into the corporate world. So restricting this money to buy into new business or using the same money to maintain the interest on an existing business and conducting affair through racketeering, meaning organized crime. So these are the three elements that have been specifically restricted. And then the fourth one is conspiring to do any of these three. These are covered under Racketeering, Influence and Corrupt Organization Act. Second law was the Foreign Corrupt Practices Act 1977. It was passed 7 years after the previous law, Racketeering, Influence and Corrupt Organization Act of 1970. Again, I'm telling you, whenever a law is passed, there is something that resulted in the formation and promulgation of that law. What happened in 1977 that the government needed this law? I'll give you an idea what happened. It happened in 1973 and 74. What was the background? Let us go to the background. In 1970s, the Watergate scandal, very famous, this Watergate scandal is so famous that people started using the word Memogate or Panama Gate and something like this. So Watergate is, in fact, the word has been used this. What was the background? It is major political scandal where the President Richard Nixon had the audacity to wiretap the fellow politician instead of regular US citizens. So normally The regular US citizens, their calls are tapped so as to see if there is anything illegal going on. But instead of wiretapping the regular US citizens, the Richard Nixon ordered to wiretap fellow politicians. So those recordings of the calls revealed something terrible. It transpired that many US companies were in the practice of handing out bribes to the government officials, politicians, and political parties in the foreign countries. The government officials were involved in giving and taking money, and the big corporations were involved in giving bribes to the government officials within the US and to the outside officials and politicians around the world. Security Exchange Commission then started an investigation, and over 400 US companies admitted. Imagine how many didn't admit. Over 400 US companies admitted on an estimated 300 million secret slush funds which were used as bribes. 300 millions in 1974 and 73 means billions of dollars now. And these are only the companies that admitted, and there were many companies that didn't admit. So this law was promulgated because it was important to pass this law, otherwise the confidence of foreign investor would have been shaken. So this law, passed in 1977, had two sets of provisions. First was, this law required that the companies should have internal accounting control, whether it has a foreign operation or not. Any company should have a system of internal controls. We will read about them in detail. And second, the second part or second set of provision, that no domestic company, whether a person or a company or on its behalf, whether it is doing business overseas or not, no company in the US should offer any corrupt payment to three people. Okay, let us just come again so that you could. This law passed in 1977 have two set of provisions, that all listed companies should have system of internal control. This is the first set of provision. Second set of provisions says that irrespective of a person or a company, whether it has foreign operations or not, whether this company is registered or not, should not make corrupt payment to three people. Number one, any foreign official. Two, any political party or its candidate or official. And third, any candidate of that political party in the foreign. So these three categories have been specifically restricted for payment, which means that the bribe can be paid to the people other than these three. It says it here. So that the only payment to foreign officials and politicians are prohibited, whereas the payment money which you call the grease money to get work done, a legal work, just like getting a telephone connection, it's a legal work. But in order to speed up, you just pay $500 or $100 to the person to speed up this legal work. So this is allowed. All right, the third law. We read first the racketeering, influence and corrupt, that was passed in 1970, then Foreign Corrupt Taxes Act of 1977. So since 1977 till 2001, everything was perfectly fine. There was no major scandal. So everything was fine for the next 25 years. But in 2001, there was a wave of scandals, a never-ending wave of scandal. And during that time, we had witnessed the largest corporate scandals in the world. I will give you a brief outline of all these. So in response to this, again, they passed a law. So in 1970s, there was racketeering. So they came up with the law in 1970. Then there was foreign corrupt practices involved during 1973-74 Watergate scandal. Then there was a law, 1977 Foreign Corrupt Practices Act. Then again in 2001 there was a wave of scandals. So in order to respond to this numerous financial scandals, a law was passed called the Sarbanes-Oxley Act of 2002. So every law has some dynamic at the back end. So what are the reasons? I'll tell you. Enron, October 2001, the largest energy company in the world, what it did, this company was involved in hiding debts over $1 billion. In improper off the books partnerships. It hid its debts and losses and continued doing so. Eventually, things went bust in October 2001. Arthur Andersen, one of the top 5 audit firms, what it did, it destroyed the evidence related to its client Enron. Arthur Andersen was the auditing firm of Enron. So when investigation started, Arthur Andersen started destroying the evidence. So this is a very serious offense which is called obstruction of justice. Then the Global Crossing in February 2002. What this company did, inflated revenue, shredded accounting related documents. Then again, Q West, February 2002. What this company did, and all these were listed companies. WorldCom, remember, this is the largest corporate scandal as of today. In history, the largest corporate scandal, WorldCom. WorldCom was world's largest telecom company in 2002. This company booked operating expenses as capital expenditure. It played with revenue and capital expenditures, and it made large off-the-books payments to its founders. Dr. Bernie Ebbers, if you read the history, he was the chief executive officer of WorldCom, Dr. Bernie Ebbers. He holds PhD in law, but his law degree couldn't save him from, he's still in jail. He's still serving life term in jail. So this was the largest fraud in the history, WorldCom, 2002. Adelphia, it's a media service company. It did the same thing, operating expenses into capital expenses, and it also had debt. All were the listed companies. So Xerox, I'm sure you know, one of the topmost companies during 1990s and 2000, it inflated revenue. So government had to come with something quickly. Whenever something like this happens, the US lawmakers are quick, because in the US the lawmakers are lawyers. I'm sure you people know. Lawmakers are lawyers, but in assemblies in India and Pakistan, there are doodwalas, chaiwalas, jaidadwalas, Panama walas, you know. I don't want to be political, but thing is that all lawmakers are from background you are all well familiar with. So they came up immediately with the law called the Sarbanes-Oxley Act of 2002. It imposes certain restrictions. Sarbanes-Oxley Act is considered to be one of the most robust laws in corporate world. The law is so stringent and so effective that this law has been used as a basis to construct the corporate governance laws across the world. We in Pakistan, in India and in Middle East have used the Sarbanes-Oxley Act as a basis to formulate our own corporate governance laws. Alright, so what does it do? It imposes certain restrictions. We have listed 6 restrictions. Number 1, Sarbanes-Oxley Act has imposed certain conditions. First, that audit committee, which we will read in detail what it is, that all members of the audit committee must be independent, means they should not have any operational role in the company. And at least one person from this audit committee must be a financial expert. This audit committee will supervise the work of internal audit department. Means we as internal auditors report to the audit committee. Internal audit department work under the audit committee. Remember, that's very, very crucial. You need to remember this clear segregation. So internal auditors will report to the audit committee as functionally and not to the management. Then you need to be very clear. Be very clear. Let me tell you, what do we need to know here exactly? Internal auditors have dual responsibility. Remember, do not forget this. Repeat this 100 times. Internal auditors functionally, their main function, they functionally report to the audit committee, and administratively means day to day. Administratively means day to day. Day to day. Our day to day reporting is to Chief Executive Officer and management. Don't forget that. We report to both. So this is something misleading. Don't go by this. We report functionally to the audit committee as a function of the internal audit, quarterly, yearly, or monthly. But on day to day operations of purchasing Operational audits on finance, marketing, inventory management, blah, blah. This is reported administratively Chief Executive Officer. So, internal auditor would report functionally to the audit committee and administratively to the Chief Executive Officer or President of Operations or the senior management. Don't forget that. Fifth, Chief Executive Officer and Chief Financial Officer. I'm sure you people remember working in the corporate world that listed companies or the companies which are not listed, they have to submit their financial statements to the regulatory agency. Like in India, Pakistan and USA, the companies have to submit their financial statements quarterly and yearly to the Security Exchange Commission. When these statements are submitted to the Security Exchange Commission, in those statements, the CEO and CFO must sign and certify that controls are working effectively. Write this and sign this and then submit it to the Security and Exchange Commission, which means you're taking and owning the responsibility for internal controls and that they are effective. And it also includes that any individual in the company, if it obstructs the investigation and restricts investigation, there are criminal penalties, there are imprisonments. So the law is very stiff, stringent, and the law is so effective that it has been used in constructing the corporate governance laws across the world. All right. So these are the three laws that we have read in detail: racketeering, influenced, then we read the Foreign Corrupt Practices Act 1977 and the Sarbanes-Oxley Act. All right. So then there is a second layer of frameworks that we need to be familiar with. Laws have to be followed, but these control frameworks that I'm going to explain, they do not carry the force of law. Remember, the control frameworks that we're going to study, they do not carry the force of law. So why then we are studying them? In fact, they're very useful for the organization's comprehensive system of internal control. They help us a lot. So they're basically 5 well-known frameworks. We don't have to read them in detail. Listen to me. These will be tested in CAE exam, but they are so extensive that it is not possible for us to read each and every component of these frameworks. So we need to know briefly about them. They are in your further chapters when we'll study on forward. So there are 5 frameworks. The first is the COSO 1994. This stands for the Committee of Sponsoring Organization of Treadway Commission. It's a US-based thought leadership entity. It is not a government agency. It's an independent entity formed by industrialists and businessmen just to provide guidance on internal control to the businesses. So whatever we are reading does not have the force of law. It's just a guidance for us that helps us in formulating internal control policies, procedure. This framework is the most prominent in the US, and every accounting student somehow studies COSO. The next is the COCO, Criteria for Control. This was established by the Institute of Chartered Accountants in Canada. There's a brief info coming in the next chapters we'll study. Then there is Turnbull report. This was submitted by to the Financial Reporting Council by Turnbull. It's quite a combination of many reports. So it's US based, it's Canadian based, and it's UK based in 2005. All these provide a groundwork on the basis of comprehensive system of internal control. So we'll read about them in detail in the coming chapters. So as I'm telling you that there are 5 frameworks, 2 remaining. Next is the COBIT. COBIT basically related to information technology. Control, the COBIT stands for Control Objective for Information Related Technology. It is the best known IT controls, because internal control doesn't mean that they are people and physical assets based. System based controls are also needed. So version 4.1 was published in 2007. We will read about this, what COBIT contains, its components, each and everything. But again, I'm telling you, you don't need to memorize it, just need to get good understanding. The last 5th one is ESAC. ESAC is an alternative control model for IT. It stands for Electronic System Assurance and Control. So all these 5 frameworks are for controls, comprehensive controls, whether system based or people based. And the last one was published by Institute of Internal Auditors Research Foundation, that the institute we are a part of. So we have done our first subunit, applicable standards. So inshallah, I'll meet you in the next subunit shortly.